Welcome back everyone. In this video I would like to talk about the new Income Tax Act 2025, which has now been rendered effective from April 1st 2026, and its differences with the old Income Tax Act 1961, which has been operational for a very long time and which has been the one law which we all have known and lived with for years. So moving ahead, so the 2025 Income Tax Act, which is effective from the beginning of last month, has retired the legacy of 1961. So what has this act done is, the 1961 Income Tax Act was known to be as very complicated, like too many provisions, too many legal citations and so on, and extremely complicated language. So the government in the new act has simplified the text of the act and reduced the massive volume of legal text. That way, it would improve the general readability of the act, meaning almost anybody, not just lawyers and other people associated with that, but even the general public could better read and understand the income tax law and would be able to comply with it better. Another reason for this act was digitization. Essentially what happened is, the 1961 act was drafted in a different era, back when computers and for mobile phones and all weren't prevalent, so much of the work was done through paper. But now in the current age, much of our work is done through computers, through smartphones, through other electronic media as well. To symbolize the new era, to essentially embody the present era more, to in order to keep up with the needs of the current age, this 2025 act has been enacted. So the entire law has been codified for a modern, faceless and fully automated tax administration age. Then the third thing the act has done is, it has enabled more transparency. So essentially, what has this act done is, under the old act there were far too many provisions, too many sections. Sometimes there was more than one provision for pretty much the same matter. So when it comes to exemptions, for instance, in the old act there were one or two or three more provisions for the same exemption. So the new act has removed those redundant exemptions, and the all the extra provisions, they have all been consolidated, condensed into chapters, into logical chapters. So essentially this ensures that the act isn't rendered too obscure or too vague. The act is codified more simply, more readably, for the general public's purpose, not just qualified professionals associated with the act. Then so the purpose of this act is, how does this act differ from the old act? So one is, compared to the old act, there has been a 40% reduction in legal bulk because of sections being reduced and so on. Then under the 2025 act, there are now 536 total sections. In the old act there used to be something around 911 sections, but a lot of the redundant sections have now been eliminated, and all of which have been consolidated under 536 total sections, thus making the act a lot shorter and simpler. Then same goes for the chapters. Under the new act there are 23 chapters, under the old there are 29. So again, this is not really much of a reduction, but it is still somewhat of a reduction. So it still helps to make the act simpler. Then the total word count of the old act was 5 lakh. Now under the new act it is now 260. which is rather nearly half the reduction. So it's a lot of reduction in the word count. Again, this word count reduction means the act is definitely a lot simpler, shorter than what it used to be earlier. Then the style of the old act used to be archaic. Not surprising, because this old act was in 1961. This was shortly after the Indian independence. A lot of our politicians and legislators, they were influenced by the British, so they used the British style language in the draft. This means the old draft was somewhat, it used very complicated legal language, and especially language which was used in that age, which really wasn't all that relevant for today's era. So the new act has fixed that. The style of the new act is much more modern. The language of the new act is much more modern, and all the provisions and all that is specified in the new act is also keeping in line with the current times. Then moving ahead, so one term which has changed is the years used. Under the old act, we had two terms for the years used. One was previous year. Previous year meant the year relating to the period for which tax is being calculated, and assessment year meant the year in which the tax was calculated. Now in the new act, both of these terms have been eradicated. Instead, one single term has been introduced. It is called tax year. This tax year is essentially a 12-month fiscal period, and it starts annually on April 1. So there is no complication behind. Essentially, the terms previous year, assessment year are no longer to be used. Instead, when it comes to filing returns for any relevant fiscal year, only the word tax year is to be used now for the relevant year. So why does it matter? One is, instead of the complicated double windows that used to be there, often taxpayers used to get confused when talking about previous and as an assessment year, since unless you were deeply associated with the act, unless you had a detailed knowledge of income tax law, or you had been experienced in the law for quite a while, you got confused as to what was previous year and assessment year. Now the reporting has been pretty simplified. Under this act, now everyone would know what tax year meant. No complication. Tax year means the year for which tax is being calculated. That's it. No complicated legal terms. And there is one single chronological window, as in no confusion about years, to just one single year for which you have to calculate tax. So that's another simplification behind the new term. So again, like I said, what is the legal clarity it's introduced? One is the reference. When we talk about tax year, the reference to the new act, Income Tax Act 2025, becomes more clear than ever. Then as I said earlier, the filing math, which used to be very complicated, like previous year, assessment years, there was confusion between years. Now that confusion is gone. With only one term, tax year, now it becomes clear as to what year you are supposed to file the tax. Then the slab structure under the new tax act. In my earlier videos, I had talked about this. Even for 2025-26 previous year, this was the slab. This is the slab rate suggested under the new regime, and under the new act also this is the same one. 4 lakh is the tax free limit. 4 to 8 lakh for 5%, 8 to 12 lakh 10%, 12 to 16 lakh 15%, 16 to 20 20%, 20 to 24 25%, and about 24 lakh it's 30%. and tax base expansion is happening something around 1%. So obviously under the new regime, there is a 5% rise in the slab rates with every 4 lakh rise in income. So basically those who are middle income earners, that is the vast majority of us, the ease of the burden of paying the tax is eased somewhat. Of course, just like in the old act, even the new act, it is possible to avail of the old regime if you want to avail of all the deductions and so on, but that's your choice. Then yes, when it comes to the middle class, there is a threshold of income by which you can up to which you can avail of zero tax, 12.75 lakhs. So when it comes to salaried employees and other individual taxpayers, the threshold up to which you have the option of paying zero tax is 12 lakhs. Now how so? One is if you are a salaried employee, you have a standard deduction of 75,000 under the new regime, and section 87A rebate now covers income up to 12 lakhs. I believe the rebate amount would be up to 60,000. So again your tax is nullified. Then when it comes to then the taking all this into consideration, the tax calculated would naturally amount to zero. Of course, under the new act, even if you are not tax due, you are still required to file the income tax return, because your income exceeded the tax free limit of 4 lakhs even if no tax was payable. So returns are still mandatory even if no tax is due. Then another impact of the new act is TDS TCS consolidation, I mean. So under the old act, TDS TCS provisions, there were plenty of those. Like there was provisions for each and every sort of transaction on which TDS TCS was deducted or collected. Now under the new act, the TDS provisions, all TDS provisions, of course, salaries excluded. I guess salaries still section 192. But the remaining TDS provisions are now consolidated under one single section 393. By contrast, TCS provisions are all under one section 394. So that way what happens is, instead of having to look over individual sections for every time you want TDS deducted on a transaction, you can look over one section and the subsection where the transaction regarding which TDS or TCS is to be deducted would be specified. So another effect of consolidation is standardized rates. So a lot of disparate tax rates, there were plenty of tax rates. The tax rate was 10% for insurance commission, tax rate was 1 to 2% for rent and so on. Now all of these tax rates have been unified under the new act. So what happens is the risk of deduction of wrong amount of TDS, wrong percentage of TDS or TCS, that risk is reduced now, which used to be under the old act. And if your section, if you did not deduct TDS or TCS or pay TDS TCS under the old law, multiple penalties used to be imposed. So there was a risk of wrong penalty being imposed for the wrong transaction. Now that's no longer the case. With only one section, the correct penalty would be imposed for any default. So there is also administrative ways. So those who are deducting TDS, they no longer have to navigate a complex maze of sections and subsections. Instead, with only one section, they can now handle the vast web of transactions can now be easily be handled using only one section for deducting tax and paying it. Then again, for small businesses, there is this thing called presumptive taxation. as in specified certain rates were specified under the old laws, like say under section 44 AD it used to be around 6 to 8% for presumptive tax, and section 44A applied for those who ran trucking business and so on. Now under the new act there is a simple table structure has been introduced for presumptive rates. So essentially instead of again under the old law, even though it was 6 to 8%, sometimes multiple rates could be imposed, like say 50% for professional service renders and so on. But now instead of that, there is a simple table structure specifying rates for businesses who want to be taxed under presumptive income presumptive rates. So again, the self-assessment procedure for small businesses is now simplified. Then when it comes to businesses which are only digital, like online businesses, like say if you consider big businesses like Amazon, Flipkart, they are entirely run online. Then other businesses are run online, like businesses which run apps and so on. All the apps we use on mobile, they are entirely digital businesses. So the eligibility thresholds have also been fully harmonized for those digital only businesses. That way the formal that way those digital only businesses, they are not kind of taxed vaguely or complexly. They are also now under they are also now under the rates specified under the table for the presumptive taxation and the new act. So again it's somewhat simplified. Then under the new act there is this thing called virtual digital assets. So the new act has, so under the old act it was somewhat vaguely recognized, the digital economy and so on. Digital assets would mean any sort of cryptocurrency or any assets you made online. Obviously Bitcoin or any such cryptocurrency would come under this. So the old act was somewhat vague on this, largely because it was enacted in 61 when digital currency wasn't even a thing yet. But of course in the modern age digital currency is used a lot. So the new act has recognized virtual digital assets as a separate asset and has even imposed a uniform tax treatment on this. Essentially what's the tax treatment? When it comes to transactions involving transfers of virtual digital assets, any capital gains made on this, there is a flat 30% tax imposed on gains derived from VDA transfers. So, and again here no deductions are allowed for associated expenses, only the acquisition cost. And any loss you have incurred on VDAs, it cannot be set off against any other income. So that's a issue, but we're gonna have to deal with it. It's somewhat bit like how under the old act income on lotteries or losses on lotteries, it couldn't be set off against other income. Then when it comes to transfers, there is a TDS rate also. It's a mandatory 1% TDS on VDA transactions. That way this is to ensure that there is transparency in the transactions, and of course it helps to track the movements of digital assets, since without multiple rates, with only one rate, keeping record of transactions becomes easier. Then when it comes to legal definition, virtual digital assets have now been classified as a separate category of capital assets in itself. Under the old act, there was no distinct category for virtual VDAs. Instead, they were classified along with other assets, but now VDAs are a separate category. And it has been explicitly stated that they are not currency. Of course, VDAs usually mean Bitcoin and all, but there was some confusion earlier. They used to be classified as currency, so there was a lot of confusion about whether they should be taxed or not. But now, when it comes to VDAs, this act has made it clear they are not a currency. They are assets in and of themselves, and transfers of VDAs are to be treated as transfers of any other capital asset. So years of confusion are resolved because of this. Then this new act has formalized a digital first approach. Now nowadays a lot technology is being used a lot, as you know. Even artificial intelligence, AIs are also being used a lot by many government websites. And also essentially this act has introduced a sort of automation where it completely focuses on faceless operations. Human interfaces are eliminated. Then assessments of income tax and returns are completely automated. Even appeals, which earlier used to be manual, or even if not manual, you had to type out appeals and so on your income tax account. Now these appeals are completely digital. There would probably be forms and such where you could uniformly file appeals, and the system would take that into account. Then the systems are completely automated. There used to be form 26 earlier, which is now completely replaced. Then refunds are now 90% of cases refunds are completely automated. Then it is planned that there would be no manual intervention. So that way what happens is there would be enhanced transparency. One is in the old act, assessing officers used to calculate taxes or some take account of income tax returns, so they had a certain human bias. Now that bias is removed with impersonal automated systems deciding it. Then the risk of litigation is also reduced, since obviously it is completely system driven. So um, basically there would be no risk of litigation, little risk of litigation, simply because of there was human errors in the assessment process and so on, as it used to be earlier. Then the tax process is completely data driven. When it comes to individual involvement in tax process, there would be certain bias on their part, like there would be their own interpretation of the provisions and so on. But now in the new act, the system would rely completely on the data provided. It would make impersonal calculations and assessments, and on the basis of that decide your tax and so on. Then so overall, what is the difference between the new act and the old one? So what has the old one done? So what has the new act done? One is the new framework has streamlined tax legislation. That way, as I said earlier, there used to be 911 sections. Now it's down to 536. And this 536 sections are logically sequenced and very simply written to ensure that everybody has better clarity, not just professionals, but even the general public. And this is volume to value. Then next is manual to machine. Now earlier under the old act, even though some technology based assessments had been introduced, the assessment was still essentially human driven. But now the legislation has mandated digital and faceless interactions as the standard. That way you wouldn't have to necessarily visit the department. Instead you can use your own computer or whatever electronic gadget you have to interact with the income tax website and file your returns or have assessments decided and so on. Then compliance has eased. One is the tax-free limit has been raised to 12.75 lakhs, include considering the standard deduction for salaried employees and rebate under ATA. And TDS sections have been also which were in the old act. The TDS and TCS sections, which were a complex maze of multiple sections, have now been unified under one. That way there is no confusion about multiple sections applying to transactions. Only one section applies now. So the filing process for India's tax base has been uh, simplified. Then this new act has also ensured better transparency. Under the old act, multiple sections meant that there basically there was a lot of vagueness in what section to apply to what transaction. But now lesser sections to more transactions mean that you could apply the same section for multiple transactions, and it is defined by the law, meaning that now there is more transparency, as in everybody knows what to do, and if there is any confusion, it would be easily clarified, and there would be no complex legalities involved in transactions as before. So those are the benefits of the new act versus the old act. So I hope this video helps you all to understand better how the new act compares to the old one, and I hope this video would help you understand how the new act would uh, is somewhat more beneficial to us as compared to the old one. So I hope this video has enlightened you all about the new act, and I hope you use this video as reference when you are starting to use the new act next year onwards while filing your tax returns and so on. So thank you all for watching this video, all of you. Please like, comment, and recommend this video to anyone else you know. Please also subscribe to my channel at Siddharth Bhatt 4898 and recommend my channel to anyone else you know as well. Once again, thank you all for watching this video. Thank you all for your time. Thank you all. Thank you.